I have just wrapped up listening to the Tesla earnings call. We have to talk about the good, the bad, and the ugly of it. I am Dr. Stock, Doctor of Education, and do you know why the chicken crossed the road? Well, it's to see the Dr. Stock fan. Knock, knock. It's the chicken. All right, let me know down in the comments if that joke format landed at all. And beyond that, let's get right into talking about Tesla. I did my homework on this. I purchased my options through Moomoo. I'll tell you about free stocks later. And I also posted a video and also my spreadsheet with my earnings forecast up through 2030 for Tesla. I did that through the Patreon. You can find that over there. And so that is still a very relevant document. I'm going to update it and put out a new video in light of the Q3 earnings. And I also have my options course over there that can tell you how you can leverage power of options, amplify your portfolio with them. In the meantime, let's get right into the commentary on Tesla. So this earnings call that we had, it was a bit different of a tone. And so that explains some of the price action that we see as it came out. If you listen to some of their previous earnings calls that they had, they were exciting, they were fun, they were celebrations, and people were cheering. And this one seemed kind of angsty and serious, I guess would be the tone that I would put it, that it didn't really seem to be like super exciting. Yeah, the margins were maintained. That was a good thing. There were things when you looked at the earnings forecast, you're like, yeah, all right, that looks pretty good. And that actually explains why when the numbers dropped initially, before we had the earnings call, why the price kind of whipped around a little bit, but pretty much stayed around where the closing price was. And then we were holding off from there. Now, I don't know how it's going to open up tomorrow. We're going to have to look at the pre-market hours. We're going to have to check the market bias. And I'll tell you what I did. I'll tell you how I think it's going to perform, but we're going to find out the truth of it in the morning when the market does actually open. In the meantime, let's get to the good stuff. Then we'll get to the bad stuff, talk about the ugly stuff and some of the beautiful stuff that's there for Tesla. In the meantime, we'll also take a look at the charts to check out the price action and where we could see the price going, at least in the near future. And then we can talk about more distantly on the horizon from there. All right, some of the good things. The AI ramp, the full self-driving miles. By the way, look at this. Let me share this with you because I want to make sure that I put that up there. So this hockey stick that you see from June, which is right about here on the chart. Let me see, about 2.5. There we go. Our 250 million, because these are millions, 250 million miles driven for full self-driving beta. And then fast forward to the end of this, we're up over 500 million on FSD beta. So huge ramp there. And I think that's highly important because data is absolutely what this thing's going to run on. And I believe that that means getting as many Teslas as possible on the road. And that's why I don't think that the margins in the near term matter. We'll talk, they do matter. They're not completely insignificant, but in the near term, I think taking that hit that we have on the EVs themselves is in exchange for what we get for the AI benefits and higher margins down the road. So I don't think this is a short-term game for a lot of reasons for Tesla. By the way, the COGS that they have for this was also another benefit, cost of goods sold. So when we look at Q3 and Q4, we actually had a peak in Q4 and we've actually decreased in cost of goods sold even in Q3 when some retooling was taking place, that they were actually kind of down on the production, down on the deliveries, not selling as many Teslas, and they were still able to work on their factories and still drop the cost of goods sold per vehicle down to 37.5 when it was up at 38.5 2 quarters ago. And you can see the steady decline that they have as they continue to push down those numbers. And so that is something that will flatten out over time. But in the meantime, it is good that they're able to drop those down and maintain some of their margins. All right, let me pop this back up for a moment. So what else was good? Q4 production and deliveries sound like they're on target. Now, mind you, I think a drawback to that is what Elon might have to do based on some of the other things that he said in order to hit those numbers, and it could mean a further impact to margin. So Elon, and this I think is a very strong positive thing for him. He spoke very cautiously and responsibly. And to me, for a company that you want to experience long-term growth, they might have these times when there's minor headwinds. He talked about 2009 being very scary and not wanting to repeat that. So he has that experience also to his credit, also to Tesla's credit. And that's another reason to stay bullish on something like Tesla, at least in my opinion. You can do your own research, due diligence, form your own opinions on that. In any case, moving from there, he also talked about 2017 through 2019 not being the best time for them. 2020, 2021, 2022, kind of sketchy in there with what we had going on, but those were actually pretty decent years for ramp. despite the headwinds that we had, especially with like semiconductor shortages being the big thing through 2022, and then also just supply chain disruptions in general, and they were still able to push through and persevere. And that is the kind of stuff that I think is some of the beautiful parts of this. So yes, there's good, bad, and ugly, but there's a lot of beauty too. And I think a lot of that tells a long-term story, not just short-term achievements for Tesla. These short-term headwinds, I think, will pass. And let's move on from there. The other thing that I've written down that was a very good thing for them was the energy storage that has the high margin, and it is expanding. Although on the downside of that, I believe it was the CFO who chimed in. You're welcome to correct me on that if you listen to it and it wasn't the CFO and it was somebody else, but they sounded very hesitant about putting too much into a steady growth on those numbers for energy storage. That is something that's a little bit spottier in its performance, that sometimes they have very good quarters and sometimes you have not so good quarters. And so I think extrapolating from that would be something to be cautioned against. So now about the bad part of this, or even ugly, you can put the two of them together. Cybertruck, we got that. I believe deliveries are November the 30th, I think is that announced date. I'm gonna have to check that one. The bigger thing about Cybertruck isn't when they start to be delivered, it's when they actually start to turn a profit, when they go cash flow positive. And Elon said that could take a good 18 months for that to happen. And the trouble for that, some of the price action that you see, and I'll tell you, their stock price dropped immediately in the after hours when Elon came out and said 18 months for that to even be profitable. They already have enough headwinds, and now they're going to start putting out the Cybertruck, and it's actually going to cost them money instead of make them money to put it out for the next year and a half. And what does Wall Street say? Show me the money, right? Show me the money now. Don't show me the money 18 months from now. Show me the money now. And I think that is one of the things, near term at least, that is kind of like, oh, we were hoping for better than that. So I think that's one of the bad or ugly parts of that. And interest rates were a huge thing. He went on a long time about interest rates and the fact that that can really impact the automotive sector, and EVs are where the main part of the revenue comes from, and it's where the main part of their profits come from. And so having high interest rates and higher for longer is bad for them, and that is something that is weighing down on them. Jerome Powell speaks tomorrow at noon, by the way. I'll show a little bit on that. That's also very worthwhile to pay attention to, because that could also be a drag on Tesla's stock price. Up until noon, we hear Jerome Powell speak. If he comes out and isn't as hawkish as we expect, because I do think the markets will draw down up until that noon hour, I think they could possibly recover after he speaks, unless he really surprises us and goes super hawk on us, in which case, if he goes more hawkish than we expect, then the market's push down even harder. So that's a little bit on that. I think Tesla's going to be part of that as well, especially because of the big deal that he made about interest rates already being high and talking about higher for longer and being a drag on that. Macroeconomic concerns, geopolitical concerns, those are things that were mentioned. A big thing, the Mexico project right now sounds like they're not going to actually start up indefinitely on that one. Indefinitely doesn't mean infinitely, by the way. That can be a common misconception. There's just no definite start time for that. And that was what he was saying about not wanting to repeat what they saw in 2009 and make things very scary for them, or 2017 through 2019 also being very scary for them. They want to be able to pay the bills, and that goes back to him being cautious, responsible, and experienced. And that's exactly what you want in a CEO, and that's how we know that Elon is still very much the man for the job and in the right place, by the way. So no date on the next gen product. Nothing was mentioned there. And like I said before, nothing was exciting or celebratory about this earnings call. It was actually kind of like, guys, things could get tough for a while. That's what it sounded like, and I think that explains the price action. And one last thing before we get to the charts, and I just want to put up the CME Fed Watch tool, because if we are in an interest rate sensitive environment with Tesla, then we better pay attention to the federal funds rate really driving this. So let's take a look to see right now where November meeting sits. November meeting, 93% chance that we get no rate hike. That's November 1st, which isn't too far away at all. Today is the 18th of October. So that's 2 weeks from today. Oh my goodness, that we're looking for that. And so we'll see. And it is possible that we still have one more hike this year. So when we go as soon as December, and that date looks like the 13th, lucky number 13 of December, that we have over a third of a chance, actually between these two, what's that, 37, 39, almost a 40% chance of a rate hike, or possibly even a 50 basis point rate hike, but that's very small. That's 2.3% that they have on here. So These numbers change all the time, by the way. They'll change again when Jerome Powell speaks tomorrow. They also change when we see what we have in the bond yields as well. So there's a lot to pay attention to there. But there's a lot of influences, a lot of factors. The big thing that we want to look for is when we actually start to tip that 50% chance, greater than 50% chance that we actually get some cuts. And right now, that's all the way out at July is where we have to go to. Let's actually go back to, this is actually June. Let's go back to May real quick. So for May, right here, we are currently at the 525 to 550. And so cutting right now is looking at a 25-ish% chance, a little bit greater than that when we look at May's numbers. And then let's go out to June, and then we'll go out to July after that if we need to. So when we go to June, we are currently right here. And when you add these up, that's greater than 50% chance that we're where we're at right now or higher. And closing in on, we're just about 40% chance that we actually have some cuts coming up, which is no small chance to have that happen by June. But right now, as the bond market has it priced in, it looks like July is that time where we finally go significantly greater to see rate cuts finally starting to take effect by the time July meeting rolls around for the Fed. So that's a while out there, but Tesla's price will not wait for that time. So let's just isolate it to the only variable being the high interest rates, and we're looking for those rate cuts in order to take place to be a strong positive influence on Tesla's stock price as well, because it should help the demand to have those lower interest rate come into place. So if that's the case, and that's expected in July, and it continues to be July for a while, then it's probably going to beat that by 3 to 6 months from where we're from before July even happens. So we could see that in January, or we can see that in March or April somewhere where we start to see that come in. Honestly, maybe that start of Q2 is where we start to see things turn around, especially if things are like macroeconomically speaking, or that we start to maybe expect some softness in the first half of 2024. Then maybe Q1 really puts in that punishment, and then Q2 is where we start to see that bottom and turning around. That's if that happens. There's a lot of if, and we could play this game all day. But we do want to keep an eye on when interest rates are expected to turn around, because that could give us an indication for when Tesla stock could really gain some strength, regardless of where it happens to be at. Elon was very clear about the interest rate impact being a drag on Tesla's margins and their ability to sell more EVs. So we do absolutely want to pay attention to that. All right, let's drop that down, and we're going to put up the Tesla chart. So this is the daily chart that we're looking at. This is the symmetric triangle pattern that we've been looking at for a while. If I zoom out a little bit more, you can see the bullish channel that we've been in for a while, and we just recently fell out of this. So let's go down to the hour to look at, and this is why we do our homework. This is why we do our technical analysis. And here we go. You can see that drop that we have. And if I zoom out some more so you can see the drop even better on this one. There we go. So you can still see the symmetric triangle pattern, and we have fallen out of that right now in the after hours. We are trading at 232 as I report this and as I record this. So what might be on your mind is, where do you see this going from here? So after hours are weird because you don't get the same volumes on it. I think that tomorrow we could still possibly open low. It is possible that we start to rubber band. The markets themselves, the overall market bias is going to have an influence on that. So we want to pay attention to what we have there. So going back up to 234 could most definitely happen. Going back up to 240 could most definitely happen. I think it's very possible that we actually come back and even retest this trend line that we have on the bottom of the channel. So just because the prices are low now doesn't mean that we can't spring back up. And that makes me a little bit nervous, because I do have a put option position on this with a strike price of 240 and an expiration date of Friday, which is October the 20th, which means if I don't cash in on that while it's down and it springs back up on me, there is no time left, which means that there's also no value left should that thing go out the money instead of being in the money like it is right now. It has over $800 of intrinsic value plus the volatility that goes on top of it. So it should be anywhere from like a 30 to a 50% gain for me, possibly even 2xing from where it was at. But I think 30 to 50% is where we're going to see it happen. So let's zoom out a little bit more and see what else we get on here. So let me reset the view again. Zoom way out so it auto adjusts for us, and look at this that we have. So if we look at near-term pricing, right about 225, 227, somewhere in there, we could possibly drop a little bit further down to that. So the market opens, we drop even further, kind of like a final shakeout from there. Maybe we dip down below to 228, down to 225 possibly. If the market really, really doesn't like this and tanks, do we see that 213? I think that would be a bit egregious from where we're at right now. Again, not saying it can't happen. And it is, I would absolutely love it. Just so you know, I would absolutely love it if my put option printed that hard, if we dropped down to 213 or 220 when my strike price is 240, because I think 660 is what I paid for it. So dropping down and giving me, let me see, down to 220, that would be $20, so $2,000 in intrinsic value on something I paid $600 for. That's a 3x from where I'd be at. So that'd be up over 200% overnight, less than 24 hours time. I will take that all day. Now, I don't want to sound like a bear on Tesla long term. And this, I think, is the really beautiful silver lining here. Everything that Elon tells us about Tesla itself, not necessarily the headwinds that it have that are external to Tesla, just things that are part of playing the game of where they're at right now. I still remain a long-term bull on Tesla. I'll still build out my position on this. I'll still dollar cost average in my position into Tesla as time goes on until I hear of something different. But the fact that it sounds like higher margins are coming our way from where we're at right now, even if it doesn't come from the EVs themselves, if it comes from the software side of things or the service side of things, or it comes from their energy storage side of things, all of that is what helps to keep me bullish on Tesla, and the fact that Elon is there. Should they ever lose Elon as CEO, oh my goodness, the stock price would most likely crater the day that we would hear that he is stepping down or that something happened to him. That would be something that I don't think any of us who are Tesla fans wants to see in the near term. So I have my Tesla stock price prediction and earnings forecast available over at the Patreon. I will tell you that from the price that I had on there, that 260 is where I see us ending the year on Tesla. So what does 260 look like? Let's go back out to the daily chart on Tesla and we'll talk about that. 260 sits right here. So it actually possibly, let me see, that's November, December. Let's go a little bit farther this way. 260. So what does that mean? It means that we possibly trade sideways going into the end of 2023. And it's possible that, we don't end up there. It's possible that we end up higher. It's possible that we end lower. But I think that 260 is a reasonable value for it to be trading at. So again, reasonable, that doesn't necessarily include sentiment. So if sentiment is very high, we exceed that number. If sentiment is very low, then we don't reach that number. That sentiment is something that we're going to have to pay attention to over time. And right now, the sentiment from the earnings call, I don't get the feeling that the sentiment is all warm and fuzzy. And so we're going to have to see. I think this uncertainty is going to penalize Tesla stock in the short term. So Tesla, I am short-term bearish on it, but I am long-term bullish on it. So I will keep on building out my position in Tesla, and I will do that using the profits that I make from the options plays that I do. If you want to see those options plays, they are available over at the Patreon. You can use that link down in the description. Get access to my Discord. That's where I post the buys and sells. Also, on the Patreon, I share my Tesla homework over there. I have my NVIDIA homework over there. I also put up stuff for technical analysis. Really, whatever it is that my community tells me or evidences that they need, that's what I build out, and that's what I have to offer. And the community itself, they are incredible, wonderful people, and I am blessed to have them. If you want your free shares from Moomoo and also trade on the platform that I use for my options, that link is also down there. You can sign up and get your free stocks. There's different deposit tiers. You get free stocks based on those. The $5,000 tier gets you a free share of Tesla or Google guaranteed as well. So find that link down in the description as well. Thank you guys for watching this video. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.